Hello, everyone. Welcome back to my weekly price action based technical analysis series. I'm thrilled to have you here for another insightful episode. In today's edition, we will be unraveling potential trading opportunities from the XAUUSD market structure. But before we get started, let me emphasize that this video is dedicated solely to educational purposes. My goal is to equip you with invaluable insight into the technical setup of the XAUUSD chart and elevate your proficiency in price action analysis. However, let's not forget the importance of approaching trading decisions with caution and seeking advice from an independent financial advisor to assess the suitability of your situation before making any investment choices. Having mentioned that, it is essential to take note that we are currently at a crucial juncture in the gold spot market with recent development from the US economic docket like the Fed's interest rate hike and impressive GDP data which grew more than expected in the second quarter at an annualized rate of 2.4%. These factors, coupled with other impressive data from the US economy, may lay the groundwork for further interest rate hikes, which will eventually increase betting in favor of the US dollar. Well, in preparation for the upcoming week, I have conducted an extensive and comprehensive price action based technical analysis. And in less than 10 minutes, I should be able to share with you discoveries using simple parameters such as trend lines, key levels, and of course, chart patterns to uncover valuable insight into the historical price movement of the XAU USD market. You may recall that our previous technical setup for this commodity reaped close to 1,000 pips from multiple entries, capturing both bullish and bearish opportunities that emerged during the previous week. Before we delve into the technical intricacies of the upcoming week, let's take a few moments to reflect on the key moments that influenced our decision in the previous week. Now, talking about last week, the week started with a consolidation phase where we saw price action confined between the $1,962.50 level and the $1,958 area. And we had the breakout of that resistance line, which triggered our first buy position. But that did not last long as we noticed that during the first 24, 36 hours of the week, price action was more of a choppy situation, a consolidation phase, which further emphasized the level of indecision in this market. Well, the key moment didn't happen until on the 25th of July when we begin to notice bullish traction around that 1954 area, where we now decided that we are going to be taking advantage of a bullish opportunity if price action breaks out of the $1,962.50 level and that descending trend line highlighted in red color. And it was at this point we had another buy position triggered. And throughout the first half of the week, I think Tuesday, Wednesday, we saw buying opportunities in this market. And not until prior to the GDP data, we begin to notice some bearish traction, of course, and we anticipated the breakdown of the 1975 to be part of that bearish move. And as you will see, we rode that move all the way to the downside. In fact, we had three positions running as we capitalized on that bearish move. So it was quite an interesting situation for us on the XAUUSD last week. And if you do want to review this commentary for educational purposes, I have the link in the description box of this current video. And if you are watching from my YouTube channel, you will be seeing the link to this commentary at the top right hand side of your screen. So, with that being said, here let's dive right into the chart. And today's edition of the XAUUSD, we shall be taking an holistic view from the daily time frame, where I was able to find get an insight into what is really going on in the market since the beginning of this year. And what I was able to come up with here on the daily time frame are a couple of trend lines with levels that we are going to be using to guide our trading activity for this week. Now, the first parameter I was able to spot here is the fact that since the last quarter of last year, price action has been very bullish. And in fact, I had an ascending trend line identified after connecting the series of higher lows, giving us something to work with for this week. However, if we zoom into the current structure and let's take into consideration what has been going on since the month of March, you would have noticed that we have, ever since price action tested the highest point here, at the $2,078 area, we have noticed that price action has been finding lower lows and lower highs, leading into a situation where you will see that since the middle month of May, price action has been caught within the 1,980 level and the 1,900 level to give us an insight into the level of indecision in the last couple of months. However, if you look at this structure closely, it is quite clear that since price action tested that high, we have something that looks like a descending channel, which emphasizes the strength of the sellers, which of course could be considered to be a retracement of that impulsive move that took us into that highest peak at this point. Now, the question going into the new week is, will this whole setup turn out to be the completion of the retracement move? That is, price could probably lead into a situation where it breaks out of both the 1980 and the resistant line of that descending channel to incite another wave of bullish momentum. That is one scenario I'm looking forward to this week. And then the other possibility here is that considering the continued selling pressure around the 1980 during the last couple of weeks is for me a little bit concerning, as we can see how buyers have been struggling to break out of that level. And with this scenario here, we could likely see price action drop to the downside, probably into the 1900 or the other ascending trend line, which also shares a confluence with the support line of that descending channel. Now, with this scenario here, we could be looking at a minimum of about 500 to a maximum of about 1,000 pips if the dollar increases in value during the coming week. Now, with this information we have here, I would like to share with you what I was able to spot on the 4 hours time frame, which of course is going to be what we are going to be using to guide our trading activity for this week. But before we scale down into the 4 hours time frame, I would like to share with you the fundamental factors that we are going to be looking forward to this week. As you all know, these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns, which, of course, will give us a better timing in such a way that we can position ourselves to capture any potential move prior, during, and even after this event. So, on the economic calendar for this week, we are going to be focusing on high impact event from the US economic docket, and in fact, we have a handful of them here. The first high impact event is coming in on the 1st of August. That is Tuesday, and that is the ISM manufacturing PMI. And then on Wednesday, August 2, we have the ADP employment change. And on Thursday, we have the ISM services PMI. And on Friday, we have the average hourly earnings for the month on month and for the year on year. Then finally, for the week, we have the almighty non-farm payroll, which of course is one of the events majority in the market will be looking forward to gauge what the decision is going to be. And in fact, we are going to be seeing the reflection of this anticipation on the chart as price action. Now, going down into the 4 hours time frame where I said I was able to identify a simple setup. So what I did here was to take into consideration the nature of price action since the beginning of this month of July. And of course, if you look at this structure closely, you would notice that price action has been bullish throughout this month. And in fact, we have a couple of trend lines here which has been supporting that bullish momentum. And this was indicated after connecting the series of higher lows. Now, this month so far, the highest point where price action has been for this month is around that $1,990 level, as you will see. And since then, we are yet to see buyers break out or even find a new high since that moment. The closest we saw here was last week, and it was around the 1,980 ish before sellers came in to take price to the downside. And this engulfing candle we noticed here was as a result of the impressive GDP data pushing price further to the downside. Now, the question here is considering the impulsive move from the GDP data, is it likely that we see price action continue to the downside? That is, following this impulsive move, we could probably see a retracement that will incite the downtrend continuation. Or are we going to be having a situation where price would respect this ascending trend line to incite another wave of bullish momentum? Well, to help us guide our trading activity for this week, I was able to spot a key level at the 1960, which of course has been a major determinant of price action since the second week of this month. Now, with this level here, I'm going to be using this as my yardstick to guide trading activity for this week. And what this simply means is that if price action continues to trade below the key level, I want to be looking out for patterns and structures that will support the idea of selling. While a break above of the key level at the 1960 could welcome structures that will support the ideas of buying this asset for this week. So these are my views here on the XAUUSD. So our center of focus basically is going to be around the 1960, where of course I will be giving you update in the comment section after monitoring how participants in the market will be reacting to this crucial point. If you have found this content helpful and useful in making your independent trading decision for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this insightful content. By subscribing, you will always stay updated with the latest ideas I share and, of course, receive notifications whenever I upload new videos and commentaries. See you in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.